Hello traders, today is the 22nd of June 2011, and happy trading to you all. In 1 minute exactly, New York will be open. The time in London is 29 minutes past 2 p.m. In New York, 29 minutes past 9 Eastern. We are just waiting for the opening bell right now in a minute, okay, for New York to open, okay. This video is for educational purposes only. Is neither a solicitation or an offer to buy or sell any financial instrument, and is primarily for the TSTW24 traders. For those of you who are new to us, we are the TSTW24 traders. Our website is www.stochastic-macd.com. The title of this video is How to Trade the bearish bat pattern like professional traders. How to trade the bearish bat pattern like professional traders. The first criteria for the bearish bat pattern is the 61.8% Fibonacci retracement level after a downtrend. We are looking at the weekly chart of the Euro USD, and the Euro USD went down from November 2009 up to June 2010, a clear-cut downtrend on the weekly chart. The first criteria for the bearish bat pattern is the retracement to 61.8% Fibonacci retracement level after a downtrend. So we will use the Fibonacci tool to measure the retracement here to see whether we have the first criteria of the bearish bat pattern. As you can see, where I'm going to place my red horizontal line, that's the zone of 61.8% and Fibonacci retracement level. You can see the price retrace up to that zone of 61.8% and Fibonacci retracement level after the downtrend. So the first criteria for the bearish bat pattern is completed here on this weekly chart of the Euro USD currency pair. A downtrend and a retracement up to 61.8% Fibonacci retracement zone, okay, not price level, zone, okay. The second criteria for a bearish bat pattern is the 38.2% Fibonacci retracement level or the 50% Fibonacci retracement level. I repeat, the second criteria for the bearish bat pattern is either the 38.2% Fibonacci retracement level or the 50% Fibonacci retracement level for the move from here to this level here. So we are talking about a retracement of either 38.2 or 50% of this movement from here to this level here, not this one, okay, from here to this level here, okay. So we want to measure this retracement in relation to this movement from here to here, okay. So we're going to use again our Fibonacci tool to verify whether we have the second criteria of the bat pattern. The retracement can be either 38.2 or 50% Fibonacci retracement level, okay. Very important for the bat pattern, okay. So we're going to draw a line now, okay, to measure the Fibonacci retracement level of this movement from here up to this level here. As you can see, this is the 50% Fibonacci retracement level where I place my red horizontal line. The price retrace in a zone of a 50% Fibonacci retracement level. It's only one candle, two candles went below that level, so we can accept that level as a 50% Fibonacci retracement level. So we have right now two criteria for the bearish bat pattern. The 61.8% Fibonacci retracement level in relation to the downtrend, okay, and also the 50% Fibonacci retracement level of this short rally in a downtrend, okay. So this retracement to the downside in relation to this short rally in a downtrend. If you compare this high to this high, you can see that this is a lower high, okay, again here, okay. So we have the second criteria for the a bearish bat pattern, okay. The third criteria, okay, is the retracement up to the 88.6% Fibonacci retracement level. 88.6% Fibonacci retracement level is the third criteria for a bearish bat pattern. The third criteria is the retracement in relation to the major downtrend here. So we have first 61.8% Fibonacci retracement level in relation to the major downtrend, okay, and then we have the 50% Fibonacci retracement level for the short-term rally in a downtrend. Now the third criteria is the retracement up to 88%, 88.6% Fibonacci retracement level in relation to the major downtrend from here to here. If we call this area 0, which is the beginning of the downtrend, 0 to A, this section will call D, okay, this will call C, this will call D. So 0, A, B, C, D. The retracement from A to D, okay, the retracement from A, where I place my cursor here, to D should be 88.6% Fibonacci retracement level in relation to the movement from 0 to A. This is the third criteria for the bearish bad pattern, and has been completed here. According to my calculation, okay, the 88.6% Fibonacci retracement is exactly at 14744. I'm going to draw a line here, 14744. That's it. Okay, where I draw my horizontal line now, that's the 88.6% Fibonacci retracement level of the movement from here down to here. The retracement, the price went exactly in the zone. You see how the price came, and when above it, okay, the price went a bit above the 88.6%. That's what we are talking about, the zone, not the price level. It went above it only to come back down. Okay, when the price was coming down, the next support level is this one here. This is about exit strategy. So how do you play with the bearish a bad pattern? When a price finally, okay, accomplish, okay, the price finally accomplishes the third criteria, which means the price reaches the 88.6% Fibonacci retracement level, traders will look for opportunity to sell at this point in time, at the point D. So after the 0, A, B, C, D pattern, the A, B, C, D pattern being completed in the zone of 88.6%, confirming the bearish bad pattern, traders will look for opportunity to sell at the point D. We do not just sell because the pattern is completed, but we will expect a bearish signal in this zone of 88.6% Fibonacci retracement level. Okay, the euro is now in the bearish zone of the bearish bad pattern. Traders sold it down up to this level here, near the smart median line, as I told you before, the smart median line for the euro USD currency pair. If you are trading forex, if you are trading the euro, you must know the smart median line for the euro USD, because the euro USD is a leading currency pair. The smart median line is at 139.57. 139.57. The price after, okay, touching the 88.6%, okay, Fibonacci retracement level, okay, finishing the pattern of the bearish bad pattern, the price went down to touch the smart median line in the zone of 139.57. Okay, now the price above the smart median line. We will watch carefully the activity, the trading activity in this bearish zone. Remember, there is a support, which is this level here. Okay, this level here of 14081 is a support level where the price did turn around. The price was coming down and found a support again. Now it's going up a bit. We will monitor the trading activity in this zone. Okay, another thing that we can mention regarding the bearish bad pattern. Okay, you will notice that during the bearish bad pattern, you see that instead of having a double bottom, okay, that the bottom at the same place. You see that there is a higher low here, so the price went down and displayed a higher low. After displaying a higher low, the price failed to display a new higher high. This is confirming the bearish nature of this bearish butterfly pattern. Okay, I hope you can understand the language of the price here. In the downtrend, the price must display a lower lows and lower highs until the price failed to display a new, okay, a lower low. Here the price failed to display a new lower low. Again here it failed to display a new lower low. After a higher low, if you pay attention to the language of the price, after a higher low right here, okay, the price, after displaying a higher low here, this low compared to this low here, after the price display a higher low, the price has failed to display a new higher high. It failed to display a new higher high in relation to the beginning of this downtrend here. In fact, the bear did stop the price in a zone of 88.6%, confirming the bearish nature of this bad pattern. I hope you enjoyed this video regarding how to trade the bearish bad pattern, the professional trader, that you will put into practice in order to enjoy your trade. I thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders. Thank you for watching.